Welcome back to our series. Now, in the previous video, we considered the meaning of accrued expenses and how it should be treated in the trading profit and loss account. So if you have not watched the video, go back to my channel and then watch that for the explanation. And if you have not subscribed to my channel, please do so for me, so that I'll be encouraged to do more educative videos to help us all. Now, in the previous video I said that in the upcoming video I'll be showing you how to treat rent owing or expenses owing appearing at the beginning of the year in an T account. Okay, so that's what I'm going to do in this video. Now just open a new page of your book or anything that you are using. Then you have your T account. I believe most of us over here know how to set up T account in accounting, and if this is your first time, this is how we write an account in accounting. Okay, so the name of the account you are opening will be on top of the T account as shown over here, and have your currency being indicated. And this side on your left hand side here is the debit side of an account or of the account, and your right hand side here is your credit side of that account. So every T account has two sides, debit and credit. Okay, and your currency that you are dealing with over here, the question is in cedis, so that's why I have my cedis sign here. Obviously I'm a Ghanaian, that's why most of my videos I use cedis. But in examination, the examiner can give you any currency, being a dollar, pounds, naira, and so on and so forth. Okay, but in my video I'll be using more of cedis, so pardon me for that. Thanks for your understanding. So let's go back to the question. I said we are going to show how to present this transaction in the T account. The question says that rent paid, which was credited to the cash book, was 20,000. So how do you show this in your T account? So rent paid, and it has been credited to your cash book. Obviously the double entry principle entreats us to credit cash whenever we make payment with cash. Okay, so that's why the cash was credited with that amount. So the corresponding account, the corresponding debit entry will be in the rent account, because the payment was made in relation to rent. Okay, so here I have my year, which is 2001. Cash, we paid by cash. Okay, so you write your cash here, cash book. So if you go to your cash book, you see it there. So that's how it's supposed to be treated. The amount is 20,000. Okay, 20,000. Sorry, 20,000. See this. So we have it there. Now, in the previous example, I said rent relating to the previous year should be deducted from the one that we paid. Okay, should be deducted. So over here, this 5,200 is relating to the previous accounting year. It's not part of this year's expenses, and it should be taken out of the 20,000 that we've paid. So if you don't have explanation on it, just go and watch my previous video. So we are taking this one out. It's not part of the 20,000 that we paid for 2001. This one is relating to the previous accounting year, which is 2000, the year 2000. Okay, so how do you take it from the 20,000 that you paid? If you want to reduce your expenses account, because it has a debit balance, obviously you have to credit that expenses account to reduce the amount relating to that expenses. So here, to reduce the 20,000 by 5,200, we need to credit the account, and the name of balance brought forward, or could be owing, rent owing. Okay, so brought forward or rent owing. So balance brought forward, the amount is 5,200. okay, 5,200. So this is how we deduct from an expenses that is not relating to the current year. Okay, so this is the total cash that we paid for rent for 2001, but we got to know that out of the 20,000, 5,200 is relating to the previous accounting year, which is the year 2000. So we have to take it off. Okay, you have to take it off from this one so that we can know the actual amount that we will take it to the profit and loss account. Don't forget that the magic concept says that all expenses for the year should be matched against the revenue that we earn for that year. So we cannot add the year 2000 expenses to the expenses for 2001. Okay, that's why we are taking the 5,200 from the 20,000 that we've paid. So the remaining amount will go to, or the difference will go to the profit and loss account for the year 2001. I'll end here and I'll continue later, and I'll show you how to balance off an account so that you get the difference to trading profits or loss account. Okay, so in the upcoming video I'll show you how to balance off an account, how to balance off the account and take the difference to trading profits or loss account. Okay, so this is how we can treat this transaction over here, the one that you see here, in the form of a T account. Okay, so if you don't have the question, you can pause the video and copy it somewhere and try your hands on it. So this is how we can present this transaction in the T account. Thank you very much for watching. Please share my video, comment on them so that I can make a good video for us all. See you.